Let's now talk to someone who has more than 15 years experience in the oil industry. Manouchehr Takin is a senior petroleum upstream analyst at the Center for Global Energy Studies. Thank you so much for coming in.
Pleasure.
We're seeing quite a lot of pressure on both Brent but also WTI over on the NYMEX. And this is on just concern about unrest spreading, or is it because Libya is so important within OPEC?
Well, it is, I think, the supply-demand, balance of supply-demand. But more importantly, the perception of those who are putting money in billions of dollars in the paper barrel, especially futures market, what their perceptions are as to the outcome of all these events. And always headlines of this nature, which are tragic as far as people are being killed and so on, is for the oil people, they fear that there could be disruption. It's a fear of a disruption. Now, Libya exports about 1.5 million barrels per day, and most of it is to Europe. Italy is about 1/3 of its oil demand is from Libya. So people think of disruptions and so on. Obviously, it goes up even before the disruption happens. And this is normal. We have had this experience in the oil market before.
But it's interesting that you talk about fundamentals, because we have reporters in Riyadh at this oil conference. They've been catching up with ministers. They say this has nothing to do with supply and demand. They see the buffer of $10 because of this political tension, but they're also telling us that they're not willing to increase production because at the end of the day, the fundamentals are strong and stable. Well,
again, it depends. From a seller's point of view, they don't want to have the risk of a collapse. You see, OPEC has had this experience in late 1997 on the quota that they call Indonesian meeting they had in Jakarta syndrome, that only a few months after that oil prices collapsed. And they think that this could happen. Also, we had the $147 a barrel in July 2008, and then it collapsed to about less than $30, $40 within 5-6 months. They fear that. And there is a grain of truth that there is this perception, the market, financial players who take positions, not only speculators, pension funds and others, what company do they rely? They fear of Enron and so on. So they go to commodities and oil. So there is that. But the debate, I think, really is not that clear. We never have enough data of the current, latest, up-to-date data on oil, supply, demand, and the stocks around the world.
Data has always been an issue. But in terms of the unrest in Saudi Arabia, how will that impact?
Well, I think that is in the back of mind of most people. If it is only Libya, already Saudi Arabia itself has 4 million barrels per day spare capacity. It would take, I suppose, a few weeks. That can reach Italy and consumers and so on. So will be a mismatch for a few weeks. But as a basic thing, there will be balance of supply and demand. In the back of mind of most people is the domino effect going to the Persian Gulf and, of course, Saudi Arabia, if that happens.
At what price do you see?
That will be very difficult to compensate.
At what price do you see OPEC intervening? Do we have to see a price of WTI at 120, 130 for them to actually say, well, guys, we need at least
I don't know. I would have thought they might make statements, at least symbolically, say something now to cool off the market. It depends, really. I can't forecast. As you can see, we have had in the past experiences. I repeated the case. Yeah. That is why they are so careful. But if I were there, I would have made the statements, just statements to cool off the market.
Manouchehr Takin, well, let's hope they do give some kind of statements just the first day, so they have still a couple of days left to put a bit of, easiness of the market. Manouchehr Takin there.